Welcome to This Week in Audit, all of your audit news in under 5 minutes. Leading our news this week is from ANZ and Westpac Bank, who have discovered that there are hundreds of home loans with fraudulent supporting documentation. That supporting documentation was in regards to foreign income used to assess home loans. Now, it's been discovered that these loans came from a number of mortgage brokers who had engaged in fraudulent document creation. Westpac said that they do actually screen and check documentation to determine authenticity, but both banks have said that they are going to reevaluate and reassess the procedures that go along with evaluating home loans using foreign source income. It has been reported that the brokers associated with these loans have been suspended. Funnily enough, the impact on the bottom line or repayments of these loans is nil. It has been reported from Westpac that the repayments of these loans are at rates higher than of their average home loan. So delinquency or failure to pay is actually much lower for the loans that have been affected than for general home loans. In news out of the US, regulators have announced stronger protection for auditors and accountants who blow the whistle. Now, whistleblowing is certainly something that's a tricky part of corporate culture. In Australia, there's the saying that nobody likes a dobber, or nobody likes someone telling about employee business to a higher up organisation. But whistleblowing is an important part of making sure that when you do see something, you do say something to someone appropriate. Now, within Australia, the Corporations Act does provide protection for whistleblowers to approach management, disclose potential wrongdoing, and not be subject to any negative ramifications. We know that in the United States, to encourage whistleblowing, the SEC actually provides an incentive scheme based on the amount that the SEC may fine parties who have breached rules and regulations. We don't have an incentive scheme here in Australia for whistleblowers. Now, IFAC also mentioned that it's an important role for those in charge of governance, so your board of directors, etc., as well as regulators, to work together to try and stamp out fraud and corruption within companies. In our final piece of news this week is news that the Securities and Exchange Commission in the United States has approved the PCAOB requirement for audit partners to now be identified in regards to audit engagements. This is nothing new within Australia. So Australia has had audit partners signing their names on audit reports for a significant number of years, with the psychology behind that being that if you sign your name on a piece of documentation, you're more likely to be more careful, and that signing your name and having your name published in the audit report as the responsible partner would increase audit quality. Now, in the lead up to the SEC's approval of this PCAOB requirement, there has been a lot of negative feedback within the US press. They say that perhaps partners don't want to have their name listed on those documents. Again, my personal perspective is if you've done nothing wrong, if you've exercised reasonable skill and care, then there shouldn't be a particular reason why you don't want your name known. We know that partners have personal reputations as well as firms charging a premium for their reputation. Perhaps this might result in more even audit quality across the market. In a difference between the US and in Australia our audit partners sign their names in the actual audit report. However, in the United States, names won't be published in the annual financial statements or in the annual report. The auditors will be putting their names on a form called Form AP, which contains the details of the audit partner. And in a slightly different step compared to the rest of the world, the audit partner will also have to provide details on the component auditors or other audit teams who are involved in that engagement. Currently, with IFRS and International Accounting Standards, there are no specific requirements for audit firms to disclose component auditors who may be doing a significant proportion of the work on that audit. That is all the news that we have this week. I hope you like. We're testing out a new background here at the Dr. Chow Chak Wing building here at UTS. This is the only Frank Gehry building in the Southern Hemisphere, and it's the home of UTS businesses, and this is where I am every day. So I thought I'd try out this backdrop instead of my usual green screen. I'd love to know what you think. Hopefully we can show you some of the externals of our building next week. See you later.